So welcome everyone to our afternoon session. I hope you've all come back from a poutine stupor and ready to listen to this panel that we've assembled to talk about faster payments. So first of all, faster payments, also known as immediate payments, instant payments. Just to be clear on the characteristics, 24/7, access to my funds, secure, ubiquitous. We're not talking about settlement right now. That's probably another session at some point in time at the conference. But that's what we're going to be focusing on. So who we have assembled here. I'll start at my far right, Jerry Norton. Jerry is our VP of Financial Services from our CGI group in the UK. Jerry has lots of experience. I think it's a 30 years of experience plus, pardon me, yes, in payments, working on a number of different solutions, both from a central market infrastructure as well as a client perspective. So delighted to have Jerry's point of view as we have the panelist conversation. Stig Korsgaard, I asked for the right enunciation. He is the Chief Sales Officer from Nets. Nets is a technology company which is focused on digitizing payments with experience in both credit cards and all sorts of different payment rails. They're responsible for faster payments in Denmark and recently were awarded the contract in Italy. So we're delighted to have Stig here. We will have lots of interesting, controversial conversation because that's what makes panels fun. So thank you, Stig, for joining us. And lastly, on my right, Tim Yudin, the Director of Design and Delivery from Payments UK. And Tim has been involved in payments also for a number of years, was part of the faster payments move, current account switching, and is really responsible for the innovation that's happening on the platform in the UK right now. So also very opinionated to make for some lively conversation. So I'm Kathy Penn, I'm part of CGI, responsible for the global payment solutions, so the various products that we have deployed around the world, both with financial services institutions as well as central market infrastructures. So I think in aggregate we have a little over 120, maybe 110 years of payment experience. So I think there's quite a lot of information here on stage and we'll have some fun. So before starting, I asked this group in preparing for this, make it real for the audience. What does it mean to have faster payments? And Tim volunteered to give us his view on how do you make it real?
Okay, so to make it real, I'm not going to talk to you about pipes or plumbing and all that other kind of stuff. I mean, I heard from Amanda yesterday we should avoid that subject anyway. I'm going to talk to you about my kids. So I've got 3 boys. Alex, the eldest, is 27. He's going to be 28 soon. Tom, the youngest, the middle one is 24. And Nick, the youngest, is 21. Now, despite the fact that these 3 boys were handicapped by having me as a dad genetically, they've all turned out to be reasonably clever. They've all managed to go to university. And I'm going to contrast the difference between Alex, the eldest at university, which is something that he started in 1997, before we had faster payments in the UK, and Nick, who is just finishing university now. So what used to happen is Alex would phone me up, as you do, young boy at university, there's more month at the end of the money than there is money at the end of the month, and he'd ask me for a loan. And assuming that he got through credit scoring with the bank of mum and dad, I had 3 options. So the slowest option was for me to put a check in the post. If I was lucky, first class, it would arrive the next day. Invariably, he'd ask me on a Saturday, so he wouldn't get there till the Tuesday anyway. I could send it electronically through the back system. It's 3 working days. Invariably, he'd ask me on Easter Thursday, just before 4 days, and you know, it'd take even longer. Or last but not least, I could get in my car, drive up to his university, and give him the cash. So that's what used to happen in 1997. Last year in June, Nick phones me up. He's at University of Portsmouth. They do a lot of sailing. He wants to go on a sailing trip with the university. He's actually working, which is quite good. He's got a cash flow problem. He needs £350 just for 2.5 weeks till the end of the month. So he gets through credit scoring with the bank of mum and dad quite easily. And I'm in Waitrose, which is a very sort of middle-class supermarket in the UK. And I remember this very vividly. I'm looking at the broccoli. And I open up my mobile phone. I go into my mobile banking, call up Nick, send him £350. About 90 seconds later, I get a text from him, which says, thanks. Well, actually, it's THX, text speak. And he's got the money. What a contrast just in a few years. So from my perspective, as a dad, as a consumer in the UK, that is what has changed. From driving time to practically instant payments.
Great story. So that's what it's going to mean for us as parents, that we can give our kids money faster.
That may or may not be a good thing.
90 seconds still sounds pretty long, doesn't it?
There you go.
I looked at the broccoli for too long, you know.
Okay, staying back on topic. So thank you, Tim. The change has been driven by different factors in different markets. So given we've got an audience, a panel here that has experience in a number of different geographies, thought we'd touch briefly on what's driven the change. So I'll start with Stig. What's driven the change in Denmark?
Well, if you look at the slide up there, you'll probably not be able to read it all. It's actually not meant for you to read it all, but it is a timeline where there is 18 months of preparation and now 18 months of operation. And I think what it shows actually is it has changed everything. It has changed the game completely for the banking sector in Denmark. They now have a real-time system installed, which nobody have ever seen an uptake like that in any other type of business they have ever done in Denmark. We have seen use cases exploding. We have seen volume being added in a pace that nobody expected. Actually, the first year in operation, the bank's most optimistic view was superseded by 5 times. So this is now a new wave that is hitting the Danish banks, the Danish consumers, and the Danish businesses faster than most other things they have ever seen. Good indications is that mobile pay, which is one of the most popular P2P payment scheme or person-to-merchant payment schemes, was the most used new word 2 years ago. Things are changing, so the government is now talking about essentially allowing some businesses not even to take cash. And we are seeing merchants going in the direction to take away terminals to accept credit cards. And I think coming from Canada, I heard recently a story that that's something that's happening up here also, but maybe of different reasons. So the point is that this is a complete new world for the banks. It's a world where they are investing, I would say, a good majority of all their innovative thoughts and money. And it's something that they are almost every month expanding with new use cases, new ways of paying, and essentially building the value proposition completely.
Mm-hmm. Excellent. What about the UK, Tim? What's driven the change?
So what's driven the change in the UK is obviously consumer demand, because primarily faster payments was set up and it was used for consumers, but it's expanded massively over the last few years. You're starting to see increasingly being used by businesses. So for example, staying on the personal theme, there's a guy I know at the gym that I go to who runs his own small marketing consultancy. And rather than doing his payroll through the back system, which takes 3 working days, he quite likes the idea of having the cash flow for himself. So he's only got 7 employees. So he sits down at the end of the month on, sometimes on a weekday. He actually pays on the last calendar day of the month, goes into faster payments, and that's how he pays his employees. Mm-hmm. And that's changed. That's quite useful for him, particularly for a small business. In terms of some of the other things that are happening, we've created some overlay services. So we've got a service in the UK called PayM, which actually utilizes both the faster payments rails, but also the link rails, which is the ATM network. Some of the smaller institutions use that. And that allows people to send each other money just using their mobile phone number. Mm-hmm. So we've built a number of things on there. But I have to say, you know, though we have had this in place for a number of years now, I still feel there is a way to go. There's work being done in terms of getting merchants to use it, and that's slowly building momentum to take off. Will I ever see in the UK people moving entirely from using credit cards and to using, straight from your bank? I'm not sure, because I think there is a timing issue. Customers like to have a lot of money in their bank, and they use a credit card because it gives them a timing thing, so they can pay it at the end of the month, etc. So I'm not sure whether you'll see that, but there's a lot of, there's a lot of opportunity to build new things onto it. And I have to say, though I'm British, I'm sort of very proud of what we've done in the UK. It's been going for a few years now, and there's probably some things that we could do in faster payments in the UK. So one example I give, and this is, by the way, this is not Payments UK view, this is Tim's personal view, just in case anybody takes umbrage at what I'm about to say, because I'm very conscious that I've got the Bank of England over there and I've got Vocalink over there who actually run the system underneath. But what I do know is that, though it's not strictly comparable, in Mexico they have a rule that says if you send a payment, it actually has to be credited to the other person's account within 15 seconds of that payment going through. Now, we don't have that in the UK, and a really good example of that is, again, I go back to example of my family. Nikki, my wife, and I sit at opposite ends of the kitchen table at the end of each month, and we sort of send money to each other for various different things. And I never cease to be amazed how it is, we're both in different banks, by the way, that the customer experience is slightly different. My money gets to her bank much faster than her money gets back to my bank, because we have allowed within the rules, it's not the technical stuff, we have allowed within the rules for the banks to have some flexibility about that customer experience. And there are very good reasons for why that was created initially. A lot of it was, fraud checking, all that other kind of stuff. But the reality is that there are countries who have moved closer to instant payment. And I mean, you alluded to that earlier, where we're great, we're faster payment, but actually, could we push the barriers a bit? I think we could.
Good. So lots of interesting change. And Jerry, from your perspective,
well, I'm going to start the argument, I think.
I know.
That's why you wanted me here, Kathy.
Because
I don't think we've done enough, actually, is the short answer. If you think about it, the investment, you take the UK, Tim, the UK example, the UK's probably spent, 500 million, and that was old money, as in a number of years ago, 7 or 8 years ago, to put it in. And if all it's there doing is speeding up some payments to Tim's family, then that's a pretty cool, that's a lot of money for that. So I think, the criticism is that we haven't put enough value-added services, actually. And that, I think, is true in a number of other countries as well. So my hypothesis is, it's pointless having, we use the everyone talks about payment rails. Well, it's pointless putting rails in if you don't put any sort of better trains on, or put a freight train on, or a smarter customer train, So I think the criticism is we need to think more about the value-added services and less about the rails themselves, yeah? And I don't think we've done enough. And examples would be, why don't we, for instance, and I don't want to go down the blockchain debate here particularly, but the ability to link a payment, and a payment which is final in the sense that what it is with real-time payments, certainly in the UK implementation, with some other transaction, some transfer of goods. So it's in the jargon, this is a DVP, delivery versus payment transaction, and make an atomic transaction in some way. That there is some real value in that to both me as a consumer, or to a business, or to government in some way, that banks could offer. And so I think we haven't done enough of it, and we should be looking at ways of bundling that transaction into something else. Mm-hmm. And until we do that, I think we're undervaluing the investment that we've made in faster payments.
Which I think is a good segue to the business case, because this is about, I know I've spoken to many folks in Canada and around the world on how do you value this business case. It's hard to use the word strategic, because strategic usually means some sort of net present value that takes 15 years to realize. And so what has the business case for faster payments been in the different geographies? And Tim, I know you've got a view around.
Okay, so my view, and I wasn't actually there at the beginning when it was being created, though Jerry told me at lunchtime that he was part of that, so maybe I'll switch over to him in a second. Yeah, exactly. But the reality is that like many of you, I kind of travel around the world to go to different geographies and talk to lots of people about the business case, and it's never easy. So my view is a very simplistic view: build it and they will come. Because if you look at it from sometimes from a very numeric point of view, it's quite difficult to do. And I mean, Stig will probably give you a really good view. I mean, he talked a few minutes ago about the wildest expectations that they had for for Denmark, it was actually 5 times more than that. So whatever numbers they did, they must be in some way 5 times better is the way that I would look at that. Faster payments originally, the requirement from, at the time, from the government regulators was same-day payments. But the industry sat down and had a fierce debate, which Jerry was talking about earlier about whether you could do that or not or whatever, ended up in a situation they said, right, okay, let's make it near real time. And that's where we ended up in the UK. The case was probably built on same day, but actually the UK took one step further in 98 when they launched that. But if you just try and focus on the numbers, guys, it's really difficult. You'd argue for 5, 10 years. So my advice, really simple, just build it and they will come.
Stig, do you want to add a bit more about the business case and the value it's driven in Denmark?
Absolutely. But I totally agree with you, Tim. It is true. Build it and they will come. But perhaps also it's something to do about where you started from, because I know the price that we paid in Denmark to get the real-time system in operation was a tenth of what you did in the UK. I think the total cost, including for the banks, was 20 million euros. So we had perhaps a better position to start from. But the point is that there are several business cases. There's, looking from the bank's view, of course, there is the money that they can earn going forward. But there's also the question about actually being able to have a license to operate in the future. You need to follow the market, and I think I can be pretty sure to say the banks, being what they have done in Denmark, actually have locked down the market. And the way that they have continued to expand the value proposition for the users, for everybody, has actually made them capable of fully compete with any other disruptor or intruder, which means we don't have that in Denmark. They also put it all in the market free for the consumer, so you can say that's a bad business case. No, it was not, because what they did was actually they created the very, very important critical mass of consumers, which means that in the, 3 years now, because some of the mobile schemes were put up before the central infrastructure, they now have a penetration which is around 70% of the Danish population. But if you take sort of the more adequate age range where people are using that, between 15 and 65, it's 100% plus who's covered. So they have got that critical mass, and now they are signing up the merchants, and actually both the 2 schemes operating in Denmark now are in the black. So the business case is there, the money is earned by the propositions toward the merchant, the corporate business, and I think they are all happy as a skunk.
That must be a Danish term.
Yeah,
Jerry, I think these are the value add, the revenue side. What about the cost side?
Yeah, I think we always miss the cost piece. And let me try and explain what I mean by that. Certainly in larger institutions, and I'll talk about the small ones in a moment, but larger institutions, commercial banks who are connecting into these payment infrastructures, in most countries, we have some sort of proprietary debit scheme. Here we have Interact, obviously. You obviously also have the international logo, Visa, MasterCard schemes for credit and debit, of course. You'll have some sort of ACH. You'll have a high-value system, LVTS here. You'll have potentially a faster payment system. You're talking about 5 or 6 different payment infrastructures at least that you're connecting to. So there's a piece of software somewhere which has got to interface to those systems. So there's about 6 of those, or 5 of those. But it's not just that piece of software. Look, what connects to that piece of software? Well, okay, I need to have some form of probably some sort of anti-money laundering thing, or increasingly so. I need a fraud system. I need probably something managing liquidity. Certainly I have exception processing. I certainly probably have some manual and repair and manual processes wrapped around that. So what's happened in most commercial banks is that we've got 5 infrastructures, and we've got 5 replicated support infrastructures, if you like, in order to connect to those payment infrastructures. So I've got 5 fraud systems. Now, I might be lucky and have one fraud management across the whole piece, but I suspect in many cases there isn't the case. So what's going on here is that every time I add one of these payment infrastructures, I'm adding a whole load of extra cost in there. And I think, therefore, and I keep on talking about this, that faster payments is an opportunity for CPA, or probably Payments Canada here, but in other countries as well. It's an opportunity to rethink how you do that. From a commercial bank's point of view, I need one gateway into this thing. I need one fraud management across all of these infrastructures. I need one repair and exception processing type sort of facility rather than 5 of these things. And if I look at it that way, then actually I can create a business case for faster payments where I can prove that I can save money over time. Mm-hmm. And I think you have to do it that way. Otherwise, we're just creating more costs. In the UK, the classic example in the UK, we did do it separately. It's a separate silo in the UK, faster payments, and the banks therefore have got more cost. I want to actually use this to reduce the amount of infrastructure in my bank.
Good, so strategic, build it, they will come. Think about the value add and look at the cost side. Now we want to get you engaged in the conversation and have a polling question for you. So please pull out your app and look at the little polling question under the agenda for this speaking topic. And we have a question for you. I guess you guys
can I do it as well?
Of course you can.
No, I'm not going to skew the results.
So we really want to get your perspective, because I'm confident you've listened to a number of conversations around real-time payments and thought about what value-added services you can deliver to your customers. So what do you think is going to take off first? So P2P, this is the example that Tim did with his sons. Request to pay, the example here, just to use the plumbing analogy. I'm at home, I call my plumber, I need some repair, and the plumber is able to get paid right after they finish the service in my home. So the idea of being able to pull money right on the spot. Government payments, this could be both inbound and outbound, and I know that's an opportunity that is in the UK. Urgent payments could be something like the disaster that's happened in Alberta and getting funds to people in an urgent situation when they're no longer at home. So what do you think is going to take off? Fascinating. 20 votes. Surely there's more than 20 people in the audience. Okay.
There's 20 people in the audience that can use the app.
Okay, he called you out, guys.
That's 28. Yeah, that's good. Yeah. 8 more people.
Okay. So P2P seems to be driving. This is the value-add service, and request to pay as the second. I know that we had a conversation this morning, Tim and I, around the government space, and interesting stat in terms of what's happening in the UK and how much paper still flows there.
Yeah, so in the UK, and this is probably not atypical of many countries, about 25% of all payments in the UK are either inbound or outbound to government, so that's central government, local government, all the various different government agencies like, you know, your car registration, all that other kind of stuff. And the largest user of checks in the UK is the government. You know, electronifying some of those things would be really useful. One of the issues that the government have is things like identity and data. But in terms of government payments, I think there is an opportunity, particularly for, and I've had a lot of engagement with the government over the last sort of couple of years about where they're thinking of going in terms of payments. But they are, choose my words very carefully here, but you know, most governments tend to be relatively conservative. I don't mean in a political sense, but in terms of how they approach things. And the reason they write checks is very simple, is that they can put a name on a check and they send it to somebody, and they know, by and large, and I can see a few people in the audience nodding, because and that'll get to the person that it's intended. But there are other options. So one of the things that they have as a problem, and it causes cost to government, is when they pay out benefits, they sometimes pay out those benefits, they send them electronically, and they also send a piece of paper in the post, which arrives a few days later, so it's out of sync with the payment. And guess what? They got loads of phone calls into their call centres who say, you've paid me £180 for my benefits this week. Why is it £10 different to last week, more or less? And because the letter explaining why it's 10 or, you know, arrives a day or two later. So there's an opportunity there to use faster payments and enhanced data to actually get information and get payments to them faster, avoiding that piece of paper and that check. So there's a lot of opportunities, and the government is very much doing work around that. I've contributed to some of the thinking that they've done on that. But it's not very easy for any large organization, particularly government, to take some of those steps. But I hold hopes that they will do that, because the theory is, of course, if government becomes more efficient, you know, I will pay less taxes. But don't hold my breath on that one.
I'm writing that one down. So thanks for answering the question. So clearly P2P is what the audience believes is going to be taking off first, following with request to pay. So let's move on to the conversation here in terms of what have we seen around the world in value-add or overlay services. It's another description for it. And what were the surprises and some of the services offered to clients? I'm going to move over to Jerry first and ask you to share the surprises, because I think this is what's going to be interesting for everybody.
Okay, well, again, I'm going to argue about this one.
Of course we are.
To follow my from earlier point, I'm surprised of what we haven't done. And one of the things we haven't done with this is actually to do pay by an account, pay from my account, whether that's in the UK, I call that a current account, but obviously here it's a checking account, DDA type accounts, things. Why can't I, why haven't, the surprise is we have not done something where I can pay from my account at a physical point of sale, or indeed at a virtual, mobile or a web-based, online point of sale. And we haven't done that. And I think there's lots of reasons why we haven't done it, which I won't particularly go into now. But the advantage, why shouldn't we do it? Well, to me, it'd be obvious. I should be able to check out on a web page somewhere and say, I want to pay directly from my bank account. I'm not going through a Visa or a MasterCard network to do that. I'm potentially not going through a proprietary debit card network. I'm paying directly from Jerry's bank account. Yeah? That's what I want to do. Why do I want to do that? Well, partly because faster payments is allowing me to effectively immediately pay for that, assuming I've got enough money, of course, then I can immediately pay for that. But also to the merchant, the online merchant, that credit is going into that merchant pretty quickly. It could be going in within 15 seconds. So that it's in the merchant's interest for me to do that. Potentially, it's in my interest to do that, because the cost of that should be less. So I know Jack yesterday was talking, did a great speech about the Visa network, and I believe in all of that. But there's a huge friction cost in the debit and credit card networks. And it's not because they're wrong, they're brilliant. But as he said yesterday, it was built by Bank of America in 1957. It's a 60-year-old piece of network infrastructure. It works brilliantly, of course it does, but it's got high friction cost. With faster payments, I believe there's a lower operational cost. That friction cost in the Visa and MasterCard is passed on to me, consumer. I'm paying for that in some way. If I can pay for my bank account using this technology, that will be cheaper for somebody, and hopefully that cost will be cheaper for me as a consumer. So I'm surprised we haven't done that. I believe that that's what we're starting to move to, not just in the UK, but elsewhere.
Okay. And Stig, you represent a company that has multiple payment rails or types.
Yeah, they still have, but I think actually back to what you said just before, Jerry, that going forward, and I think that's what I see generally in several countries in Europe now, the movement is actually to have a single rail, and on that rail you will have all future types of payments, even non-urgent. It doesn't matter, but it will be a single rail. But coming back to the value add and overlay services, and your surprises again, Jerry, well, come to Denmark, because we have solved that.
I do go to Denmark.
You can actually at the point of sale pay with your mobile device. It's still fairly new. There is around 40,000 terminals installed. You can either by Bluetooth technology or a QR code initiate the payment. It's integrated with the cash registry, and you actually immediately after also get the receipt electronically into your app. So that means that going forward, you don't need to have all your physical receipt and even hide them sometimes to remember if some of the goods that you bought is broken or whatever. You just have them electronically. Mm-hmm. And it works, extremely fast. And it's so fast that we actually have 99.9% of all transactions completed in 1.5 seconds. So if you have that end-to-end, and it shows on your account also immediately, well, you actually have the full value proposition. And I think the big surprise that we saw in Denmark was the use cases migrating by themselves, and the competition that the banks actually subsequently went into to try to match those use cases and even continue to build the value proposition. Some of the most recent things we have seen is now they are sort of multiplying the applications. There's a new feature being introduced actually this week, which is called We Share, which is a feature where people who jointly are perhaps preparing a big party and they will split the bill. You can have all costs associated with the party in the app. You can easily split it. It just runs out and everything is paid for by the individual who signed up to be part of those who are paying for that party. So that's another way. The request to pay is now coming with an invoice presentation where you can pay easily to whoever you owe the money. And, well, checks, of course, is something we don't have, so we can't move into that market. But the surprise is really how fast that things can go. And the merchant, even the internet retailers, is now almost all signed up. So the vast majority you can pay also with your faster or mobile app, which is then a faster or real-time payment, as we call it in Denmark. So that's the surprise. I don't think any of us could even imagine how it is. I even nowadays hardly use my card anymore because most of the places it's just a mobile phone, and if you have a touch ID on it so you can just access it, it is as seamless as cards. It's even better, I would say, and cheaper.
Fantastic. So I imagine the day, Tim, you're sending the money and you're getting the invoice from your son when he's at the pub.
Yeah.
Electronically. So
Yeah, so I know what he spent the money on.
no, so you know where you're spending the money, the money on. So quickly, from your perspective, what's been the surprise?
So I think the surprise to me is a bit like Jerry, is that some of this stuff really hasn't taken off yet. And the reason that I think that is true, and I think this is true for many countries around the world, we're quite an introspective industry. We get very excited about our own pipes and plumbing and technology and all the rest. There are a lot of consumers out there. I mean, we heard this morning from the Federation of Canadian Independent Businesses about how he was saying you should take people on the journey. Sometimes we forget that. We get very excited and we don't do a good enough job individually as institutions, but also collectively as an industry, and going out and selling. What tends to happen is we'll do a bit of a sale when these things happen initially and then it kind of dies off. But if you want to get ubiquitous, get people using all of these new services, either it's the core service or the overlay services that we've seen being developed in various different parts of the world, you have to do that consumer education, that business education piece as well. And I think that's one of the things that, you know, I'm not, maybe it's not surprised, but I think that we could do a lot better with that.
Okay.
Yeah.
So I know everyone's anxiously awaiting what's been the results. So how have the markets adopted this? And I know, Stig, you're going to talk about the fantastic Danish example and the results you've seen there.
Yeah, I think essentially, well, maybe as a background, you need to know Denmark is not a big country with 5.6 million people. So if you look at the numbers isolated, they're probably not big. But an indicator is, and I discovered that last year, there's a consultant firm out there who actually sort of indicate the success of real-time payment systems by how many transactions is done per inhabitant per year. And last year, we discovered the most successful one was actually the UK system. That was 17 transactions per inhabitant per year. We actually matched that last year, and this year we're looking at around, with the current numbers, at 25 transactions per inhabitant in the country per year. So it goes extremely fast. We've just passed 10 million in May of transactions, and above that is actually a number of unasked transactions within the banks, which account for another third that we are not seeing. So it's the numbers, the penetration. It's really going so fast that it's spinning sometimes. And I think, interesting enough, 85% and moving actually higher and higher is still initiated by some sort of mobile device. It's only around, I think now, 30% which is internet bank initiated. So there's no doubt it is the mobile device that is driving that to the extent where it is.
Okay, excellent. And so in the UK, Tim?
So like Stig, I've got a chart which shows stuff going up quite a lot. In terms of volume growth, there are broadly three different types of of payment go through the fast payment system. So standing orders, regular payments that you might make for rent or whatever, growing by 3-4% annually, roughly in line with the economy, I suppose. Forward dated payments, so batch submissions by corporates, etc. So that could be some payroll stuff, etc. A little bit more than that. Single immediate payments are, the kind of thing that I did for my children I was talking about earlier. Substantially more than that. So the P2P and increasingly P2C or C2C is growing quite a bit. But I think the thing I really wanted to highlight was the behavioral change. There's been a clear shift in behavior in the last 24 months. The vast majority of people used to make kind of between 9 and 5, 8 and 6 within banking hours. But now more than half of all single immediate payments are made outside of traditional banking hours. So because it's Friday night and you owe some, Stig and I have gone down the pub, I owe some money, I can make him the payment at 9, 10, 11 o'clock at Friday night. And the last bullet point on the slide is it reflects mobile banking. That is increasing dramatically, and it's all about the customer experience. It's all about giving people what they want. And people don't want to, go and use banking branches, do things during banking hours, etc. They want to do stuff, whenever they want. And again, I'll kind of come back to, about my family. I'll come back to me now. I bank with a bank in the UK that set up an internet banking operation back in 1999, one of the first customers of that. They are part of a bank that also has a branch network. I've been with them for 16 years. I write about 1 check a year. I've been into a banking branch 3 times in those 16 years. So on average, I go into a banking branch every 5 years. So I'm the sort of person that doesn't want all that physical presence. So when mobile banking came out and I could start using that, guess what? I was in there straight away with the early adopters. Previous to that, I used to sit and do it on my computer at home, etc. So that is what's driving, that's driving that change. And the kids are growing up and they're in a 24/7 real-time world. They expect to be able to do stuff, and that's what's driving those numbers on that chart there.
Excellent. So we've got 8 minutes left, and I'm just going to move right to sort of a couple of questions here that we wanted to leave the audience with. And it was, I asked these gentlemen if you could give one piece of advice to banks, corporates, government, Payments Canada, as they move to faster payments, what would it be? So I'm leaving only one. I will cut you off. And why don't I start with you, Jerry?
Yeah, I think it is this point I was trying to say earlier on. It's about standardization. It's about using it to simplify and rationalize the infrastructures, whether it's that which sits in the centre, e.g. run by Payments Canada, or indeed by Tim, or influenced by Tim in the UK for Payments UK, or whether, as I said before, it's in the commercial bank itself. I think the key lesson is to use this as an opportunity to simplify and rationalise the huge mess that we collectively have created in the payments industry, and I think there's real benefit from that point of view.
Okay, Stig.
Well, very simply, don't be afraid, because I think certainly we can testify to that this is definitely going to be a success. But as Jerry is saying, be clever about it, because don't think this as a real-time, faster payment, instant payment, immediate payments. Dear Child has many names, but think as this as your future payment platform for everything you want to do, because that is essentially what it's going to be. And if you look around in various communities around the world, you will see that is effectively what is happening.
Mm-hmm. Excellent. Tim.
So I probably can't improve much on what's been said already, but I'll go back to, I think, what I said a little bit earlier in the session. Really, really simple. Just build it and they will come. Have faith. It will work.
Excellent. So we actually have 5 minutes left. Any questions from the audience? Yes, please.
Yeah, I have a question for Steve. I think I heard you say you expect there to be one rail out there. And we've kind of always, when we hear talk in the industry, we use the FedEx model.
Mm-hmm.
So how soon, how much do you want to, how do you see that working with a single rail there? Because to me that kind of implies that it's always going to be a faster payment.
Well, I think it will generally probably mean going forward that there are more payments, there will be real time or faster. But I also think there for a long time to come going forward will be especially corporate payment, large payments, bulk payments, which do not have that urgency. And to me, on a solution, it's just a question about SLAs. So, okay, you might have a bulk payment of 100,000 payments. It's non-urgent. I'll just put it. I have an SLA that says I can do it within 3 hours. That's fine. That's what's happening. I think the point is very much to what Jerry said. It's thinking about having a future where you will have lower total cost of ownership, but at the same time you actually will gradually envision that everything is going towards instant. And when I say a full service platform, I actually mean for the card payments too. So put them on that rail too. No need to have a separate system from that going forward.
Different world.
But it will gradually happen, and it will mean that something will shift. And what I'm seeing in some of the countries, even in my own right now, is that we actually did the thing. We built consecutively 2 new infrastructure systems, first an intraday and a real-time system over a period of 3 years. And all the banks I have met in the last 6 months have said that was a mistake. We should only have built one. But at that point of time, the regulatory push were for an intraday system. The volunteer push from their side was actually to build the other one on top. And they even actually made it resilient, so they made the real-time system being capable of taking all the non-urgent payment in the case there were some problems. But nowadays they will not do that. And I don't think they really care that much that a number of the payments, because given European regulation, whatever, the push is anyway to lesser interchange rates and all that sort of thing. So I don't see a problem, but it will take time before you get to that, and there will still be things that has no need for that, and it could just stay. But it will be a hell of a lot more cost effective for everybody to have it.
Thank you. Other questions from the audience? Been very gentle on the panel. So I want to thank you all. Thank you for the opportunity to have the group talk about real-time payments and what it means. I think in conclusion, what I take away from the panel is, a number of key messages. Build it, they will come. Have faith. Think about this think about this broader than just a real-time payment rail. How do you use this as an impetus for change for your entire payment infrastructure? Because I think that's what's going to drive us to this FedEx model that we've been talking about for a decade. And so that means bringing a lot of different stakeholders within your organizations to have this conversation. So we wish you all the best of luck in doing that. And we'll look forward to having you on the panel next year when we have this conversation. Thank you.